I find taxes are the most, the number one thing that people pay in retirement. That is the biggest cost item is taxes. People don't think about that, but it really is true because they've got all this pre-tax money, right? 401ks, IRAs that you never paid tax on, and guess what? It's time for pay the bill. Welcome to Wealth Creator Radio, where we help people overcome the uncertainty of having enough retirement income. I'm your host, Eric Heckman, a certified financial planner with over 30 years of experience. We want you to enjoy life and not have to wonder where your money will come from and how long it'll last. My mission is to show you how to develop a personalized income plan so you can retire more and have worry less wealth. Here at Wealth Creator Radio, we cut through the noise and get straight to what matters. We understand that the world of retirement planning can be filled with confusing products, ever-changing tax laws, and volatile markets. That's why we're here to help successful people like you navigate the uncertainty and create a blueprint for a thriving, work-optional life.
Hi, welcome to our show where we talk about retirement planning. I'm Lou Ann Fulmer here with Eric Heckman. He is president of Heckman Financial right here in Silicon Valley, and he is a certified financial planner. So he's been helping people like you have remarkable retirements for over 30 years now. And it's his mission to help you plan for that lifetime income that you're going to need in retirement. Enough money to help you weather most any economic storm. So you can transform your retirement worries to confidence, and it's his goal to help people retire. 1,001 people retire by 2031. Our phone number, 800-454-1184. You may call or text the word visit to that number. Remember to get the digital toolbox. You're going to hear Eric talk about it today. It includes Eric's book that he's written and other informative resources about retirement that you're going to want to have. And remember, our podcast comes out every Tuesday morning, so you can always listen for that in case you miss part of this show. Just search for Wealth Creator Radio. And Eric, so good to be here with you again. We're going to talk about really the retirement questions you're getting all the time, right?
Yeah, no, certainly. There's always a few questions that most people have that are most common. Everybody, of course, needs to get a little bit more specific for their situation, right? So
yeah.
that's why we have people meet with us and talk with us. But yeah, we're going to at least hit the top ones that you hear most often.
Yeah, every once in a while we do a top 5 list, and this week it's the top 5 retirement questions. So, we experienced years of low interest rates. Mortgage rates finally have started to take off. Bank rate says we're at about 7.09% for a 30-year mortgage rate, and that's prompting a lot of new questions. People are wondering, whether or not they should take out a mortgage in retirement. So that's my first top 5 question to you, Eric. Should I get that dream retirement home in retirement?
Well, it depends on where you're getting it from, right? So, if you're sticking around the Bay Area, that probably doesn't usually make sense to do that. Just put a bunch more money into the house, and usually most people are doing the opposite direction, right? Where they're trying to downsize, and it might be the dream house or dream location. Now, I do have a few clients that are buying that dream second home, and I've got one in particular that's buying one down in Monterey area, and it's a lot of money to remodel and redo, and so you have to kind of balance that along with the does this make sense type of thing, right? Yeah, you get the dream spot, but you don't want to blow your entire nest egg on that either. So lots of times I have probably more of my clients by far downsizing and going to a house where they can pay off the mortgage, not have a mortgage. Sell the house here and then move someplace else cheaper, which is pretty much everywhere. And so, but if you need a mortgage, then sometimes you do. But ideally, if you get that old mortgage, it's in the 2s or 3s. Yeah, it's better to try to stick with that. But one danger I see a lot too is people doing those home equity line of credits, and those things have shot up a lot, and people aren't paying attention how high that interest is now.
I know.
So yeah, you definitely have to watch out.
So, okay, so this kind of brings me to the next question. Another top 5 question people have: should I pay off my mortgage before I retire? My husband asks that all the time. He's constantly thinking about that. What are some factors we need to consider in making that decision?
Well, there's always emotional and there's financial, and emotional tends to win. So emotional says, I just want this house paid off, or grandpa told me, or, my aunt told me, or somebody, it's usually something like that. But really financially wise, yeah, if you're getting that new 7%, 6 or 7% mortgage, yeah, you should probably pay that off. But if you got one of those 2 or 3% mortgages and you can put money in a, guaranteed account right now for 5% for 5 years, why would why would you give up that higher earnings to put money into something that basically doesn't earn, right? Because
Yeah.
your house goes up and down in value regardless of your mortgage. So you putting money against the mortgage doesn't make your house more valuable. It gives you more equity, but it doesn't increase the price of the house. So yeah, if you can put that money and earn, that 5% while you're paying 3, that's what wealthy people do. It's called leverage, using, borrowing money at cheaper rates and investing it higher. So yeah, I would not pay off that if you can help it.
Okay.
Emotionally.
Okay, cool. Another top 5 question, and how much should I have saved at my age? Now, we don't know what that age is, but I know you get that question a lot, right? How much should I have saved before I retire? Things like that.
Yeah, or what's the dollar amount is the
Yeah,
other
there
big
you go.
one and
Yeah,
stuff. And,
right.
that all goes back to having a plan. You need to have that income plan because it really depends on how much you're spending. I mean, and what the real number is, not the lie that we all tell ourselves of what we spend. so if you take your last 12 months bank statements, divide by 12, that's what you paid for. If you're paying off your credit card every month with that bank account, you don't need to look at your credit card, just look at the bank account, and that's really how much money you took out. And if that number's, 5,000 or 8,000 or 10, whatever that number is, okay, how much money do I need to have put away minus, any steady income stuff like Social Security? How much do I need to what's that, that difference? And so if you're getting, say, 3,000 from Social Security, but you need to get 8,000 a month, well, you need 5,000 a month to live on. Well, that's like 60,000 a year. Well, if you got 100,000 at, say, $1 million at 5%, that's only 50. So then the easier math would be you need a little bit more than that, right? So, so it really depends on your spending, and that's where we do some planning. That's where we like to do a lot of, go through the 5 areas that everybody needs to have a plan for, which is the income, investments, taxes, healthcare, and legacy. And one of the things that we do here at Heckman Financial is we really like to have a lot of educational materials so people really kind of understand what things are going on. And so we've got a couple things like, will my money last as long as I do? Am I paying too much money in taxes? Even a copy of my book, Worry Less Wealth, and an opportunity to set a time to meet with me. All you got to do is to get the access to that whole digital toolbox is by texting the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
And you're listening to Wealth Creator Radio with Eric Heckman of Heckman Financial right here in the Silicon Valley area. We're going over our top 5 retirement questions today. Here's another one for you, Eric. Whenever we see a lot of volatility, people tend to wonder, ooh, should I be putting my money somewhere else? Okay. So this next question is, if I'm worried about my 401k balance, should I stop contributions to it and do something else with that money? Maybe put it in the bank or pay down debt?
Well, one of the big things is to start decreasing the risk level, but lots of times, a lot of people just go to do those target date funds where then they flip you from having more in stocks and more to bonds. And bonds historically don't do that much of a return. I remember I was just meeting with somebody recently, and the 1-year return on their bond fund was 6%, but the 5-year was 3% and the 10-year was 1%. That's okay. It had an okay year last year, but the rest of the years were pretty bad. And so there are a lot of guaranteed options out there. Some ones that with insurance companies that you can have some guaranteed growth in terms of you don't lose the money, but when the money goes up, you get those earnings. And I think that's a great way to do it, is to decrease your risk by using something like that. If you're over 59 and a half, most 401ks even let you roll that money to an IRA, or if you've got older IRAs from older companies that you worked with, you can use that money. And so, I would definitely start decreasing the risk for sure.
Okay. And I want to ask you this. Are there other questions that you are hearing a lot right now, Eric?
Those are kind of the main ones. I mean, probably the biggest one that we didn't really touch on, though, is taxes.
There you go.
And taxes are, I find taxes are the most, the number one thing that people pay in retirement. That is the biggest cost item is taxes. People don't think about that, but it really is true because they've got all this pre-tax money, right? 401ks, IRAs that you never paid tax on. And guess what? It's time for the pay the bill. So I've got a lot of clients that are in their 70s that are in their highest tax bracket ever without working because they're having to take so much money out and pay so much tax. So yeah, really having a tax plan is really critical now. So, again, if you want to get a lot of that data, am I paying too much in taxes in retirement? It's one of the downloads. So if you want to get access to that, a copy of my book, Worry Less Wealth, or have a chance to talk with me, Eric Heckman, all you got to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
Be sure to like and subscribe to Wealth Creator Radio so you can stay up to date on ways to build your wealth and create a retirement you and your family will enjoy for years to come. Like and subscribe today and create your wealth for tomorrow with Wealth Creator Radio.
Thank you so much for joining us. I'm Lou Ann Fulmer here with Eric Heckman. So happy to have you along with us today. We have all experienced a series of unprecedented events in recent years, if you think about it. The global pandemic, historic market crash, then higher levels of interest rates, then inflation and global unrest. If you're like a lot of people, you might feel like you have less control over your future. So you know what we're going to do right now? We're going to discuss what you can be doing right now to help take back control of your financial future. Eric, let's start out by talking a little bit about where we are right now, financially speaking, and how we got here.
Yeah, well, it is one of those things where, after time, stuff fades away from memory of, things that were huge for you at the time, right? And not as big a deal. Mm-hmm. So, just, at the beginning of the decade, of course, in 2020, we had COVID hit and, that led to that kind of almost a flash crash. 22 days, the market dropped 34%, and we didn't know what was going to go on and, where things were going to be, right? And then the government printed tons and tons and trillions of money and handed them out to everybody. Yeah. And, it did rebound, and obviously things changed a lot. So, but of course, that was something that nobody expected to that level or that speed and, all the things that happened there.
Yeah, exactly. So none of us can predict the future, obviously, with any certainty. So we have to, think about potential economic scenarios. So what's your best guess on how this might all unfold in the future, Eric? Do you have your crystal ball handy?
Yeah. Well, I actually do have a crystal ball.
You do?
In a conference room. Yeah, but I've never been able to get it turned on. And there's no on switch, so that's the annoying part.
That is annoying.
So somebody can tell me how to do that. That'd be great.
Yeah.
Beyond that, inflation's going to always be something. I mean, it's silly when people think that there's not inflation. It's always been there. It's just sometimes it's worse and sometimes better, and ebbs and flows, right? So, anytime you're talking about retirement or having money down the road, you can't retire on today's monthly income. You got to be able to retire on, a monthly income that's getting bigger, right? To keep up with those increasing costs. And then, of course, the tax law. The tax law ends at the end of 2025. So, it's going to go back to 2017 rates unless Congress gets their act together and does something. And historically speaking, any of these expiring tax laws, they've always replaced them with a whole new tax law, but almost always in December. So it's almost always last second.
Yep.
And probably the bigger thing I think that not enough people are paying attention to is the fact that no political party, not since Clinton Gingrich days in the 90s, have we balanced our budget, have we tried to pay down our bills. All they're doing is say, hey, we'll give everybody, tax cuts and just keep running up the credit card. And at some point that bill's going to come due. And so that's when you have to think about, okay, how much of my dollars are open and liable for taxes by the government? And if you've got a ton of money in 401ks, IRAs, 403bs, any of these types of plans, those haven't been taxed yet. Those are supposed to be, you're supposed to retire at a lower tax bracket. Remember that? That saying, which, I find very few of my clients are in. I actually find a lot of people in their mid 70s when they have to start taking that money out of their IRAs. They're often in a higher tax bracket than when they were working.
Good.
So that's how crazy that's been. So taxes are always going to be an issue. Obviously the stock market goes up and down, but this all goes back to having a plan. If you got a plan for a personalized income plan that shows you how your money's going to last throughout the rest of your retirement, which buckets should you be taking it from, and where should there be money coming from? Once you have that figured out, then you're going to be okay, right? And then it's just a matter of, okay, how do I invest this to make sure this all works? And which tax buckets should I be taking first? And what tax moves should I be doing today to lower my lifetime taxes, not just this year's taxes, right? And so that's what we do here at Heckman Financial. We actually help people create that blueprint to worry less wealth, where we look at your income, investments, taxes, healthcare, and legacy plan and tell you which plan you have in place, because you got something. You just may not know what it is. And then we'll tell you, okay, here's some things that you might want to fix. So, if that's something you want to get a little bit more information on and you want to set a time to talk, we can talk on the phone with me, Eric Heckman. All you have to do is text word visit to 800-454-1184. Again, text word visit 800-454-1184, or book directly online at wealthcreatorradio.com.
We make it very easy for you. Another thing on wealthcreatorradio.com is you can check out their events, okay? Eric holds many events throughout the years. You can get those details online, even sign up for them at wealthcreatorradio.com. And we're so happy you joined us today. Thank you for joining us. You're listening to Wealth Creator Radio with Eric Heckman. Now, Eric, okay, you've kind of told us about, you've got to have that plan. Every week we talk about what we need to do to get that plan. Let's go through, since this is not really a rosy picture for everybody, every retiree right now, what would be some steps people could take right now to try to regain control of their financial future in any scenario? I guess it would be plan for the worst, hope for the best, maybe?
Yep. Yeah. Well, one of the things you can't do is you can't retire on hopium.
That's right. Yeah.
If you're hooked on hopium, hopium's where you're hoping everything works out. So if you've got 100% of your money all in the stock market, you're hoping everything's going to work out. And we know statistically there's going to be some bad times and good times. And that's a pretty scary thing to be having 100% of everything in stocks and bonds. And so, one of the things that we have always done here is we always make sure all of our clients have three types of money. The market money, yes, that's for the long-term growth. But you want some steady income money, some, usually like 10 to 20% of your portfolio where it's just putting off good income, ideally in things that are less volatile, things that don't correlate with the stock market. And so that way you get some cash flow for those monthly withdrawals, right? You need to have income in retirement. And then also super critical is having some guaranteed funds that can't go away. There's some great tools out there where, like some of the insurance company tools, where you link the money to the stock market indexes, and you can earn great rates when the indexes go up. If the index goes negative, you don't lose a dime. You just start over now at a lower point, so it's easier to earn more percentage increase next year. And with something like that, you've already got some guaranteed money. You have some money you can grab, regardless of good or bad markets. You've got some steady income paying off, and that lets your market money kind of bounce around and not be as dependent on it. And Warren Buffett's old advice is rule number 1, never lose money, and rule number 2, never forget rule number 1. So
I love it.
Yeah. So it's kind of joking. You always have to lose. You do have some ups and downs, but
yeah.
Right. But you want to focus on the downside.
So okay, I want to talk about people who maybe are trying to invest on their own and some common mistakes they're making.
Yeah, well, lots of times it's just chasing whatever the hot thing is, right? That's the really bad one. You always hear about the herd mentality of investors, where they, all of a sudden everybody starts talking about one thing and they all jump in, and then, oh, guess what? That thing's pretty much played out, and so then it goes right back down.
Yeah,
and and then also just not having a plan, really. I think that's usually the biggest problem is sometimes people say, oh, should I invest in this? It's like, well, where is that in your plan? And like, well, I don't have a plan. I just thought this thing sounded cool. It's like, okay, well, let's figure out why and where does it fit in, and does it make sense for you, and, so forth. And, the other part is I think a lot of investors know what they did when they invested into something. They never had a plan for how to get out of that thing. So if you're going to, put money in, say, buy some certain stock or fund, when are you going to sell it? If it goes up so much, and also if it drops so much. And that's the part people never forget. They're never, plan on doing. They remember what they paid for it, but if it goes down, I'm not going to sell it because it's I want to make it have it come back. Well, what if it never comes back, right?
Mm-hmm.
And then if it's got up a ton, why don't you do some stuff to protect it and make sure it stays up? So, again, it all goes back to having a plan. We've also set up a great toolbox of great ideas, of great downloads. Will my money last as long as I do? Social Security, timing decisions, all sorts of stuff. A copy of my book, Worry Less Wealth, and even the link to set up a time to talk. So if you want access to that, all you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
If something's worth doing, it's worth doing right. There's a particular time of life this phrase couldn't be more appropriate. How can you know you'll live the retirement you've always imagined? After all, life can be so unpredictable. You've worked hard and saved. Watch your accounts go up and down with the market. Your advisor says, don't worry, you'll be fine. But you still don't feel confident. Eric Heckman at Heckman Financial has a checklist to help you find out if you're on the right track for retirement. If you can check all the boxes with confidence, you may be ready for retirement. If not, Eric can help you address any potential costly mistakes. To get Eric Heckman at Heckman Financial's complimentary checklist, call or text LIST to 800-454-1184. Call or text LIST to 800-454-1184. Firm offers insurance services. Investment advisory services offered through Heckman Financial and Insurance Services, Inc. Investing involves risk, including the potential loss of principal.
Hi, I'm Lou Ann Fulmer. Thank you so much for joining us today. I'm here, of course, with Eric Heckman of Heckman Financial. The 2017 legislation, known as the Tax Cuts and Jobs Act, brought some huge changes to the tax code. It impacted a lot of individuals depending on their income level, their filing status, and, of course, deductions. Now, what's often forgotten is that, many of its provisions were only temporary, so they are set to expire on December 31st, 2025. Eric, you mentioned it earlier. How will people be impacted if Congress fails to act to extend these tax cuts?
Well, there's several things, and it's all very personal, right? Because everybody's situation is different. The Tax Cut Act also did the SALT deduction. It dropped it from being able to write off all your state taxes and property taxes, mortgage interest down to only 10 grand of that, of that state and local tax deduction. And that really hurt a lot of the people on the coast and stuff. And so, some people had $50,000, $60,000, $70,000 deductions that dropped to $10,000. And so some people, it might actually be a benefit to have it, go away. But on the flip side is the tax rates also went up. The 12% would be 15, 22 would be 25. So, basically most of the brackets would be about 3% higher. If you're both working, it's not as bad, but with the old tax law, if one person was working, the marriage thing was double all the brackets.
Oh my!
And so it was definitely a better deal for one person working, but if two, it was kind of a toss up there. So it really depends on your situation, but for the most part, more people will be paying taxes. For retirees, definitely they'll probably be paying more in tax. So that, of course, then says, you should be doing some tax planning, right? Before this happens.
Exactly. So it's not going to just be taxes on the wealthy. So let's get into that, what people could be doing right now to protect their retirement from these higher expected taxes.
Yeah. So the funny part I always think about is if, say you've got $1 million house with a $300,000 mortgage. Most people will say, I've got $700,000 in equity.
Right.
Now, if somebody's got $1 million in their IRA, 401k and such, I still to this day have never met anybody who says I have $700,000 of equity in my retirement plans.
Interesting.
So both of them have a loan against them.
Yeah.
Both of them have no difference in, except for one's a very visible loan, right? That you get a statement and a payment due every month, right? For your mortgage. The other one, you just don't get that statement. You don't get that bill, and you don't see that until you start taking it out. And if rates go up, say rates go up by 3%, like they're slated to, that means 3% of your entire retirement balance drops, right? Because if you have that 3% higher tax, you just lost 3%. Doesn't, if you made 10% on your account, you still lost the 3.
Right.
Even with the other money, it's on your entire balance. So how can you start moving that money out? Well, one of the easiest things to do is start looking at Roth conversions. That's where you pay the tax today, which sucks, right? Nobody wants to pay taxes today. But, you don't go to the store after the sale ends.
No.
You try to get down there before the sale is over, right? So if things are on sale, and yes, taxes can go on sale, then you want to go down there and get the bargains, right? It's not a 2-for-1 or buy one, get one. It'd be nice if it was something like that, right? But, it is a tax savings. And so the more you can convert those monies over, the better off you're going to be long term. You're basically just buying the government out of your situation. And that way, if you've got 100,000 in a Roth, it's 100,000. It's not 70.
Right.
And so if you can get more of that money over there, and they don't have to be huge conversions. They can be, 20, 30, 40, 50,000. Most people we're not doing monster conversions because then of course you get to too high tax bracket.
Right. So yeah, Bobby and I, we're both, are we both 65? No, I'm 65 and he's not yet. He's turning 65. But what we're doing is something like that, trying to convert as much as we can from our traditional IRAs to the Roth. Is that something everybody should be doing? Or is it just more of an individual thing?
Well, I mean, for some, it might be individual. I mean, if you don't have that much money saved up, then you probably don't need if you're already in the 10% bracket, there's probably not much reason to do Roth conversions or something because you're going to be in a low bracket if that's probably not going to change.
Okay.
But, sometimes I see people who are, they're making just a little bit of money, maybe they're older and still working a little bit. And then they're trying to fund a deductible, IRA. It's like, why? Fund the Roth. You can also just fund that and then you never have to pay the tax on it. Because if you're going to save tax on this little tiny bit, because even if you're in the 10% and it goes to 12, that's still a 2% loss of your entire balance.
Right.
So anything you can. I mean, for most people, it does make sense to do some sort of conversion. Now, if you're in the 37% bracket, no, probably not. Right. So, but that's where maybe at least funding a Roth 401k, getting some money tax free. Because if you're in a high tax bracket, typically you're going to stay there if you're doing a good job and saving money and investing money and so forth. So you need to have that money built up and there. So that's the part we need to make sure that people are looking at and make sure that they have a plan, make sure they're looking at, really, to me, it's their lifetime taxation, not just that 1 year taxation. And not enough people do that. They all talk to their tax person. They say, how do I save taxes today? Well, the only thing you can do, in February to April is do a deductible for IRA. Well, that may actually make you pay more tax over time. And so, lots of times people ask the wrong question and they get the right answer to the wrong question.
Oh.
So the right question is, how do I pay the least over my lifetime? That's where you have to have it be part of a plan. And if you have a personalized income plan, you can figure that stuff out. But one of the things we actually have in our digital toolbox is, am I paying too much in taxes in retirement? And then timing Social Security, because Social Security obviously has tax ramifications, other things like that. So we've got a lot of these great quick reads to get you some information, get you some education. Once you see that data and you see get that information, then it's up to you if you want to set a time to talk or not. But I would definitely urge people to get this data. The more you know, the better off you're going to be. So to get that, all you have to do is text the word toolbox to 800-454-1184. Again, text word toolbox 800-454-1184 or download directly at wealthcreatorradio.com.
Yeah, obviously, Eric's goal is to help you keep more of your hard-earned money in your own pockets. So make sure you get a hold of Eric and his team. They would love to guide you and help you with tax strategies. So thank you so much for joining us. This is Wealth Creator Radio with Eric Heckman of Heckman Financial. He has the education. He's licensed to help retirees with all of this. So again, thank you. I'm Lou Ann Fulmer here with Eric Heckman. Any final thing you want to say about tax planning tips?
Well, I mean, dollar for dollar, the most return you can do is tax planning. Lots of times people ask, what's the biggest expense going to be in my retirement? And a lot of people think it's medical costs. Or inflation or, other things. It's always going to be taxes. Taxes are the number one cost in retirement. And people don't pay attention to it. And they've got a financial advisor who says, I don't do tax advice. And they've got a tax advisor who says, I don't do financial advice. And good luck.
Right.
Right. So
Yes.
that's horrible. So that's why we're licensed to do taxes here. That's why we have that education, because, you need to be planning for both of them. You need to know how do I minimize tax over the rest of my lifetime. If all you have is 100% taxable income, there's no tax planning. It's just, pay it, right? But if you get some tax-free, some tax defers, some taxable, some various different types of money, we can do all sorts of great tax planning. So, again, that's where education comes in. So, if you want to get access to that digital toolbox, all you have to do is text the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
Imagine for a moment that an intense storm is pounding your house. Will the roof leak? Will the siding peel away? Will your basement flood? If your house is properly built and maintained, you'll be fine. But what about your 401k or your investments? The stock market has had a great run the last few years, but is its current turmoil making you feel uneasy? Are you confident your portfolio is built to weather the financial storm? Now may be a great time to have your retirement plan inspected. Call Eric Heckman of Heckman Financial at 800-454-1184 now. Eric will examine your portfolio and show you if your investments are in need of some weatherproofing. Call Eric Heckman of Heckman Financial today at 800-454-1184. That's 800-454-1184. Investment advisory services offered through Heckman Financial Insurance Services, Inc., a registered investment advisor.
Hi, I'm Lou Ann Fulmer here with Eric Heckman. He is president of Heckman Financial. We're so happy to have you along with us today. There are some words of wisdom that stand the test of time, and we're going to share some timeless advice right now for you to keep in mind for retirement. Eric, we've done this before. I'm going to give you a quote, and then I want you to talk about what that has to do with retirement planning, okay?
Yep, sounds good.
So we're going to start off with the Oracle of Omaha, maybe the greatest investor of all time, Warren Buffett. And he said, rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So maybe easier said than done, though, right?
Yeah, definitely easier said than done. And in terms of Buffett being a great investor, I always kind of think that's a little weird that he gets so much credit for being an investor, because he's actually somebody who's bought companies. So
okay.
he didn't make all his money on, just trading stocks and, buying Bitcoin or, stuff like that.
Yeah.
So, for his companies, he's trying not to lose the money. And when he does do investments in he does buy stocks in other companies, and such. But, that it is definitely good that you try not to lose money and make sure you know what you're buying. And, a lot of times people just jump into stuff and they have no clue what the company is or why they're buying the stock, but just as everybody's doing it. So let's, jump in the, jump on the herd, right?
Yeah.
And, so that'd be one thing to just be cautionary about. And obviously you have to have some money that you don't lose on. And so that's one reason why all of our planning is based on the 3 types of money. Everybody talks about the market money, especially Buffett, and but there's also foundational money, and you'll see a lot of actually articles about criticizing Buffett a lot by why does he have so much cash? Why does he have so much money guaranteed, and sitting there? But you need that foundational money, because if times do go bad, then you got a whole pot of money to jump in, right? Mm-hmm. And then also if it helps you get through the bad times if you've got somebody that can't be lost. And then you also need some money that pays some steady income. So that's one of the big keys is having those 3 types of money. And I think that's partially what he was alluding to for that.
Okay, very good. Here's another quote. This is from, actually, it's a Venezuelan proverb, and it says, he who doesn't look ahead gets left behind. So how do you take that?
Well, I don't know. I do like arepas a lot, so I do eat a lot of Venezuelan food. But they don't talk about this when you're buying those.
No, they don't.
No. So no, you definitely have to be looking forward and looking not just for now. Lots of times you see stuff where sometimes there are some short term things that that might happen, but long term, is that really going to make sense? And It's like when people say, oh, well, people aren't going to buy real estate again because mortgages are up. Well, people used to buy more, real estate when mortgages were 14, 15%. So, no, that doesn't make any sense. Right. So yeah, I think you need to be looking ahead, making sure you're planning things and also tracking where you've been. Cause, one of the biggest things is spending in retirement. I think that's the toughest one is, once you have that income plan, the nice thing is we can check in with people because, I had one client that we were wondering why their withdrawals were so high all of a sudden and such. And, basically not that they lied to us, but their plan was to spend $6,000 a month in retirement and they were spending $9,000.
Oh dear.
Well, if you do the math on that, that's a 50% increase, right? It's not just $3,000 more, it's 50% more than they were planning. And, it's like, okay, you have to have a reality check there and go, is this really doable? And that's one of those things where, it's hard to measure your progress unless you look backward. And then, once you look where you've been and look where you're going, it's like, ooh, this was not the plan we had.
So, you better stick to the plan, right?
Well, or change the plan, right? Maybe you're going to have to downsize sooner, or maybe you're going to have to do something else, right? But at least know that ahead of time because you don't want to be, desperate and then having to make a change, right? As you're spending your last dollar and then you need to sell that house in that month, right? Or something. So I find that that's the hard part. And again, it's kind of annoying, but it always goes back to that 4-letter word, plan. And, you got to have that plan. And so the key items is really looking at that and going, okay, well, how do we make sure this plan's on track? How do we make sure things are going the right way and the way we should be going? And so, then, that's one of those things where once you have that income plan, where things are going, you're going on track. You look at your investment risk. You can look to see, okay, am I, going to lose a lot? Like Warren says, don't do. And then look at the taxes along the way because those three are very interrelated. And then, of course, look at the healthcare costs before 65, after 65, long-term care, and the legacy issues. Who's going to get your money after you're gone? Is it set up right? So, those are the 5 areas of the blueprint to worry less wealth. And, that's something if you want to set up a time to talk, it's super easy. All you have to do is text the word visit to 800-454-1184. Again, text the word visit 800-454-1184 or book directly online at wealthcreatorradio.com.
And one thing I want to mention about your website, too, is people can sign up for events. Check out Eric's events and his team at wealthcreatorradio.com because you do a lot of different events on really all of those things you just mentioned that are in your plan. You do events discussing those, right, Eric?
Yep, exactly.
Okay, so thank you so much for joining us. This is Wealth Creator Radio with Eric Heckman. I'm Lou Ann Fulmer, and we are going over some timeless advice. And Eric, here's another one from P.T. Barnum. And did you ever see The Greatest Showman yet? Have you seen that yet? I mean, it's kind of
Well, actually, my oldest son's first play ever when he went to high school was Barnum.
Oh, really?
So he actually had to learn how to juggle. So they all had to learn circus stuff. So
yes, I totally love that. Do you juggle?
No.
Okay, I did not thought maybe, you kind of had to teach him or something. But anyway, very cool. So this is a quote from P.T. Barnum. Money is a terrible master, but an excellent servant.
Yeah, so that one is kind of a fun one. I mean, of course, he's also the guy who said there's a sucker born every minute, right? So yeah, maybe basically say there that if you're desperate for money, it's not a good thing. But once you have it, it's definitely nice to be able to use and enjoy, and it is very true that once you have that savings, once you have that that nest egg, there's a lot less worries in life, right? If you have zero money, I mean, literally, I had one person came to one of our events, and she said she once had a couple $100 in a Roth, but she had to spend it for something, and she's 60. And, she's wondering if she can retire or when she can retire. It's like, you have no money? And, it's kind of hard to like even have that conversation. It's like, what are you thinking? And such. So, yeah. And then, of course, she wanted to be a life coach, which I kind of always thought was comical too. Yeah. Because really, Yeah, those who can't do teach, I guess. But
Yeah.
I don't know. So
Aw.
it's really tough if you have nothing. So you definitely want to make sure you've got some money.
Okay, so speaking of having nothing, Samuel Johnson, he's an English playwright. Final piece of advice here he gave. It is better to live rich than to die rich. Do you agree?
Well, I mean, you also don't want to do stupid stuff like, buying caviar and driving Ferraris when you have no money in the bank or something, right? So
True.
you don't want to put it on debt level, but no, I mean, I think there's so many of my clients that it's like, my gosh, spend more money, go have more fun, enjoy life more, because there's so many people who aren't doing that because they're worried about running out of money because they haven't have a plan. And even when we show them you're going to be fine, it's like, go off and have more fun. Go do more. It doesn't have to be travel. It could be just going out to fancier dinners or if you're traveling, go first class. Why not? Enjoy it and such. So, I mean, I think it is definitely a lot better because, you don't need to leave the next generation a whole bunch of money. You probably didn't have a whole bunch of money left to you. So,
Right.
Yeah. So I do agree to that part of it. Obviously you have to make sure it's within your plan. And so don't go crazy with it. Right. So, but, again, if you got that blueprint to worry less wealth, or you've got that income, investment, tax, healthcare, and legacy plan, then you're going to be fine. You're not going to have to worry. But, if you don't, well, then you should probably set a time to talk to us. So easy way to do that is all you have to do is text the word visit to 800-454-1184. Again, text the word visit 800-454-1184, or book directly online at wealthcreatorradio.com.
Thinking about healthcare costs, long-term care expenses, and income needs in retirement? How will you afford it all? And what can you do now to help ensure your loved ones will be okay when you're gone? Eric Heckman at Heckman Financial has access to tools and strategies that can help you pursue your retirement dreams without taking on too much risk with your money. Interest rates are the highest they've been in decades, so take advantage of this seemingly once-in-a-lifetime opportunity to help protect your retirement before it's gone. Learn about the tools and features available today that could provide bonuses, potentially adding up to tens of thousands of dollars in additional income when medical needs arise. Schedule your visit with Eric Heckman at Heckman Financial today by calling 800-454-1184. That's 800-454-1184. These opportunities won't last forever, so call now to help protect your future. 800-454-1184.
Hi, I'm Lou Ann Fulmer here with Eric Heckman, president of Heckman Financial. And we've come to the time in our show when Eric tells us a story. It's story time. Today, he's going to do a wealth success story. It's always a really good lesson or example to see how things can work out for the best with retirees. So, gosh, Eric, can't wait to hear what you have for us today.
Yeah, well, this story about, we'll just call her Liz, but, she worked in high tech and, did what you're supposed to do, right? Funding the 401ks and all that stuff. And, she'd built up a pretty good amount of assets. But she was looking at her house and looking at how much, houses are worth. They just, San Jose has, I think now, 70, there was some stat of 70% of the homes are over $1 million. And so this was a couple of years ago, those even before then. But, she realized she could cash out and live someplace else. And she really wanted to move up to the mountains. So she moved up to Reno. And, up there, she, had the Four Seasons, right? Had, close enough to be able to get back to the Bay Area to see friends and still be able to travel and have fun. And so she's doing tons of fun, cool trips every single year. And so she's kind of divided the money up a couple ways with my help. We've got some foundational money, some money that can't go away, some stuff that's guaranteed for life, some stuff that's just got guaranteed principal but earns great interest rates. So we take that money out in those bad years, you're like 2022 when the market's down. Well, let's take the money from there that year for spending. And then she also has some steady income. We've got a lot of stuff that just says, low volatility, high dividends. And she's really trying to mostly live off those dividends. And that's what we've been, for the most part doing is just, using those dividends to pay for those trips, to have that fun. And then that allows the market money just to kind of keep growing and doing what it's supposed to do, right? Is bounce around with the markets, but over time get higher. And, by just kind of watching that and paying attention, she just look at her bills. She looks at her, spending level, and we recheck in with, with the income planning software that we use and make sure everything's on track year by year. And yeah, it's been going great. She's done Antarctica. She's done lots of crazy fun trips. She's about to go off to New Zealand and Australia.
All right.
And, doing all the fun stuff that you're supposed to do, right? They try to take 2 big trips a year. And, really been getting out there and having fun. And, the other things, she keeps going to concerts, doing all the other fun stuff. So, she's not just sitting at home, right? Because,
Good.
I think that's one of the big problems too, is people don't, especially when they move, they have to get kind of reconnected. So you have to find some charities to, or, places to volunteer, or, at least groups to join and, make new friends and such. So that's, travel's nice because you get to see different things, get to do different things, but you also want to have some, human connections that we all learned after 2020, right?
Yes.
And so, so she's been doing the things that you're supposed to be doing. So that's one of the fun parts of my job, is sitting there and watching people go from, that working life into that enjoying life. And, it's been working great for her. And, we've got a lot of great tools and resources in our toolbox, how to make sure your money lasts as long as you do, make sure you're not paying too much in taxes and retirement. What's the right way to make your decision for Social Security, and a lot more. Copy of my book, or even a time to set a time to talk. So all you have to do is text the word toolbox to 800-454-1184, or download directly at wealthcreatorradio.com. Again, you've been listening to Wealth Creator Radio. I'm Eric Heckman, and we'll be back next week and help you create more wealth in retirement. Again, the number to call is 800-454-1184. Thank you for tuning in to Wealth Creator Radio. I'm Eric Heckman, and it's been a pleasure guiding you towards a more confident and secure retirement. Remember, my responsibility is to always do what's right for you, our client. Together, we can cut out that fancy-sounding financial jargon that doesn't help and focus on what truly matters for your financial future. If you're ready to take control of your retirement planning and build a personalized income plan, contact us at 800-454-1184 and text the word toolbox to schedule a complimentary consultation. If you're looking for more resources and tools to build your retirement future, don't forget to check out the Wealth Creator Toolbox, your toolkit for a secure and confident retirement journey. Until next time, retire more and worry less with Wealth Creator Radio.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.
This radio show is a paid placement.